The world of finance has been rocked in recent weeks by the collapse of Silicon Valley Bank, sending shockwaves throughout the traditional banking system. As banks faltered, the price of Bitcoin soared, reaching levels not seen in a long time, with Bitcoin proponents proclaiming this as the dawn of hyper-Bitcoinization. But as we look to the future, the question on everyone's mind is, what comes next? Will Bitcoin continue its upward trajectory, or will we see a sharp decline? The recent surge in Bitcoin's price has reignited the conversation around its potential to disrupt traditional banking systems and usher in a new era of finance. Join us as we explore what the future may hold for Bitcoin and the wider cryptocurrency market, and how it may shape the financial landscape for years to come. Hello everyone, it's me, King Midas, and welcome to the Myth of King Midas. And in this video, we will look at what future holds for Bitcoin. But before we begin, we would like you guys to subscribe to the channel, like this video, and hit the notification bell icon so you do not miss out on amazing and entertaining content. The creators of Bitcoin envisioned it as a safer and more secure alternative to traditional banks, but over time it became more of a speculative investment tool than a legitimate currency. However, the recent banking crisis has reignited faith in the original Bitcoin thesis. The financial world hasn't experienced such upheaval since the 2008 banking crisis, which threatened to destabilize the global economy. Today, we're witnessing similar fears as three major U.S. banks, Silvergate Capital Corp., Silicon Valley Bank, and Signature Bank, have all collapsed in rapid succession. But what's behind the sudden failure of these banking giants? The reasons for SVB's failure are complex, but essentially boil down to a lack of liquidity and poor investment choices. The bank's troubles started when cheap credit dried up, prompting companies to pull cash out of SVB. Compounding matters, the value of SVB's assets decreased due to interest rate increases, which caused the bank's balance sheet to crumble under the pressure of fast withdrawals. In turn, this triggered a classic, self-propagating, panicky bank run. Last year, as the world was still grappling with the fallout from COVID-19, the Federal Reserve had to step in to boost economic activity. They kept their benchmark rate near zero, injecting cash into the economy. However, this led to a rampant inflation crisis that threatened the stability of the economy. It's clear that the Federal Reserve's decision to raise interest rates was a critical moment for the economy in March 2022. They were determined to curb inflation and cool down the economy, and so they raised rates by 25 basis points, setting the target rate range between 0.25% and 0.5%. This was just the beginning of a series of rate hikes that would continue for months to come, with the benchmark rate range eventually reaching 4.5% to 4.75%. And last month, the Federal Reserve ended up raising the rates by 0.25% from 4.75% to 5%. As its customers started withdrawing money, SVB was also hit by higher interest rates on the asset side of its balance sheet. As the financial world was on edge, something unexpected happened amidst the chaos. The price of Bitcoin skyrocketed, reaching heights not seen since almost a year. Last week, Bitcoin broke through the psychological barrier of $30,000, marking a significant milestone since June 2022. Bitcoin enthusiasts rejoice, attributing the surge to investors seeking refuge in digital currencies after the bank's collapse. Thanks to overall market optimism and liquidations of short positions, Bitcoin's price surpassed the $30,000 mark in the near term, gaining more than 6% in just 24 hours. This was a significant milestone as the world's largest cryptocurrency had been struggling to stay above the $30,000 threshold since June 2022, when it fell more than 50% off its all-time high of over $64,000 in November 2021. Ethereum, the second largest cryptocurrency by market cap, also followed the suit and started gaining momentum alongside BTC. The statement that accompanied the March Fed meeting was the first in months that did not explicitly state that more rate hikes would be needed, causing risk assets to celebrate ever since. This has fueled optimism in tech stocks, with the tech-heavy Nasdaq Composite Index up more than 16% year-to-date, while the Dow Jones Industrial Average has only risen a little over 1% over the same period. This optimism in tech stocks has also been reflected in cryptocurrencies, with Bitcoin up more than 80% this year alone. As the crypto market experienced a surge in prices overnight, many are asking the question, is crypto winter finally over? The answer is not so clear-cut, but the recent liquidation of short positions has certainly fueled the bull market. In fact, over $150 million worth of Bitcoin short positions have been liquidated, adding to the upward momentum of an already rising market. For those unfamiliar with short positions, it's essentially a bet against the market. When short positions are liquidated, buy orders are typically triggered, leading to more upward momentum in the market. This recent activity has many crypto enthusiasts declaring that the prolonged period of price declines across various cryptocurrencies is coming to an end. The broader crypto market has been in a state of flux since the collapse of blockchain project Terraform Labs and its corresponding Terra USD and Luna coins last spring. This was a significant blow to the industry, leading many investors and traders to believe that crypto winter was here to stay. However, with the recent surge in prices across the board, it's clear that the bull market has returned. While it's too early to say for certain whether crypto winter is truly over, the recent activity in the market is certainly encouraging for those invested in digital currencies. Although the upward momentum has been a welcome relief, there are several factors at play that make it difficult to predict the future of Bitcoin's price in the short term. With the current geopolitical climate, economic indicators, and the Fed's interest rate policies all playing a role, the market is in uncharted territory. What comes next? However, if you study Bitcoin's recent surge, it is reminiscent of its performance in the first half of 2019, where it more than tripled in value following a year-long bear market. Currently, Bitcoin has risen 80% this year, surpassing even traditional risky assets, such as the tech-heavy Nasdaq index. This impressive rally follows a 12-month decline where prices fell 76% and hit rock bottom in November 2022. The drop in subsequent recovery shows similarities to the patterns seen in the 2018-19 bear market in terms of length and trajectory. The bottoms in both cycles lasted around 370 days, and the peak-to-trough return after 510 days reached 60%. In 2018, the bear market rallied peak after 556 days from the 2017 peak. On June 29, 2019, with a 34% drawdown from the peak. While history is not likely to repeat itself in the same fashion, if the fractal were to continue, Bitcoin could peak in the coming months at $45,000. The year-to-date rise of Bitcoin has been called a hated bullish move by crypto observers on Twitter, as several prominent traders were positioned for a continued sell-off in the first quarter. A hated bull market typically begins during peak pessimism, and it reaches a fever pitch once investors who reduce risk and anticipation of an extended slide begin to feel underexposed and join the bullish bandwagon. The rally of 2019 ended with a significant blow-off top before Bitcoin resumed trading at a 40 to 60% drawdown from its 2017 all-time high. The early 2023 rally has all the hallmarks of a hated rally. What I personally think is that the price could continue to rise in the coming weeks, even reaching a price point of around $45,000, which could trigger a strong sense of FOMO and euphoria among investors. While there may be some smaller peaks along the way, it's important to remember that predicting the exact behavior of the market can be challenging. It's possible that market makers may take advantage of this surge and begin to sell their positions, which could happen within the next 4 to 5 weeks. Ultimately, only time will tell how Bitcoin and other cryptocurrencies will perform in the future. As we come to the end of this video, it's clear that the world of finance is rapidly changing, and Bitcoin's recent price surge may be a sign of things to come. Whether you're a seasoned investor or new to the world of cryptocurrency, we hope this video has provided you with valuable insights and perspectives. If you enjoyed this video, please like and share it with others who may be interested in this topic. And don't forget to subscribe to our channel for more informative content on the latest trends in finance and technology. Also, please don't hesitate to leave your opinion in the comments below. Thank you for watching, and we'll see you in the next video.